Well, last night on Tonight with Bruce Whitfield, we were talking about the worst performers on the JSE, and our guests were asked to pick 3 shares each from the bottom performers of 2014. We got a mix of shares. We didn't get much correlation, but it was interesting to see what their thought process is on underperformers. But would any of our guests tonight look at any of the top performers of 2014 and add more to those positions? Joseph Busha, the Managing Director of JM BUSHA Investment Group, Nic Norman-Smith from Lentus Asset Management, and Dr. Adrian Saville from Canon Asset Managers joining me again this evening. Top performers last year, the average of the JSE was up about 7% with dividends close to 10%. Not a fabulous year by any stretch of the imagination, but the top performers, the top 20 shares, did nearly 50% and more. I mean, it was a good year for great stock pickers, Adrian Saville.
Yeah, I think your point about stock picking is well made. If you'd bought the bottom 3, you would have been down 50. If you'd bought the top 3, you would have been up 100. Yeah. So there's a huge difference between the decisions you made, and it was a good year for a handful of businesses. Some usual suspects in the top 20, Mr. Price, Aspen, Naspers, make that top of the pops list, and then some to make a first appearance. Absolutely,
there was some quite big surprise. I mean, Trustco and Sibanye, blah blah. The big surprise for me, Joseph, was Telkom, up 110% last year. The most extraordinary performer on the JSE, the least loved company in South Africa, is the best performer of the bigger companies on the JSE.
I agree with you. I think we had a field day in the office trying to find out what's driving Telkom. I think nobody wanted to buy Telkom at the beginning of 2014. We had some few issues on the corporate governance issue with obviously the loan that was advanced to the FD, but the entire market ignored that, and obviously it picked up about 170% for the year. There isn't really much from a fundamental point of view that could be said is driving Telkom.
Would anybody take Telkom for 2015, by the way? Would any of you?
No.
You wouldn't take it in 2014 where it went up by more than 100%, but you won't take it for 2015 either, despite the momentum behind it.
It does make an argument for the bottom fishing that we were talking about last night, that you might find amongst last year's biggest disasters the greatest opportunity for this year.
And that's the problem, isn't it? It always makes it really difficult, because Telkom is just so hard to explain beyond probably the first management team that's got its act together at Telkom in 10 years, a board that is actually qualified to do the job, and a government that is saying, you know what, you guys seem to be doing an okay job, let's not interfere with you, we'll interfere with Eskom and SAA rather.
It's fundamentally cheap, but it's been fundamentally cheap for a number of years. But I just think it has much changed. I think it's a case of the momentum. Yes, you know, as a value investor, I'd like to say it's gone up because it was cheap, but I do think it started going up, and I think the momentum's carried it on, because yes, they're doing some good things, but I think as a business, I think they've missed the boat, and I think that the sort of mobile telcos and other companies are eating their lunch. I think they had a mammoth opportunity, but I think a large amount of that value has been destroyed. So
okay,
I'm not
so
convinced.
We look then at the top performers, and we've got to look at the serial top performers, because these are the shares that nobody will touch at the beginning of the year, and they go up 50% anyway the following year. The likes of PSG and Capitec. PSG is mostly Capitec in this particular case. Mr. Price, outperformer for 20 years in a row. Oh, it's got to end sometime. Well, it hasn't yet. Naspers continues to outperform, another 50% up during 2014. Aspen Pharmacare, 60% up. And are there any one of those 5 serial outperformers that anyone would take into 2015?
Well, we pretty much overweight Aspen. I think.
Would you buy more though?
We would add on.
You would add to Aspen. Okay, so Aspen gets 1 vote, right? Aspen, anybody?
No,
Bitter pill?
I'm not a taker.
All right. Aspen gets the JM BUSHA stamp of approval. Is there any one of the other top 5 performers of 2014 that you would take? Naspers continues to run.
Of the top 5 or of the superstars?
Of the top 5 so far. This is the top 5 superstars.
Naspers' expensive barriers to entry in the industry are incredibly low.
That's
I think
what they
the
said
stock
last
is
year.
vulnerable.
It went up 50%.
Sure, and don't get in the way of momentum.
Would you take it though for 2015? No, absolutely not.
you know, the thing with these stocks is some of them are going to make you look stupid and some of them are going to make you really kick yourself. Yeah. But the reality is, if you look over time, over history, when you pay these kind of multiples for these kind of businesses, you generally get hurt. Yeah. But why do people carry on doing it? Because there's the Naspers or the Aspen that looks really great. Can you successfully continually identify those and pick them year in and year out? No. And so when it turns, you get badly hurt.
So of the 5 serial outperformers, we've got 1 vote for Aspen and that's it. So out of the top 20 shares, are there 3 that you would take, Adrian Saville?
There's 3 that I would sort of have a look at, and
3 that you would buy. Go, step downstairs, Nicky Newton-King's office right now here at the JSE. Say, Nicky, I'd like to put an order in, please, for X, Y, or Z.
Okay, there's 2 that I would buy: Transaction Capital and Ascendus.
Okay, Transaction Capital and Ascendus. Would you go for 3 or for any of the top 20 at all?
No.
Not a single one, Nic Norman-Smith.
If you like, which I don't like the pricing, but if you like the Capitec and the PSG stable kind of story, PSG is a nicer route, but I think all of those assets are just too expensive. So a discount into an expensive asset.
So not a single one of the top 20 you would take?
No.
What about you, Joseph? You've gone for Aspen. Is there anything else in the top 20 you would take?
I think I would agree with my colleagues. It's quite tough, but possibly if I had to add on Rand Merchant Insurance.
Rand Merchant Insurance is an interesting one.
Yeah, it's more diversified.
That's the business that has got as stakes in Discovery,
yeah.
In Outsurance, and probably Momentum as well.
Yes.
You would go for RMI. Any other arguments for RMI?
No, there's not, but with a little bit of reflection, can I add Sibanye Gold?
What? Doctor, can we get a doctor, please? A medical doctor.
This is a mining beard.
It's a mining beard. I mean, and what's happened to Adrian Saville? Why would you go for Sibanye Gold?
Now, my argument is not for Sibanye per se, although it's, they're on some really great assets and very, very well run. My argument is for gold. I think that this is a year for gold.
Why?
Just have a look at the state of global capital markets. Deflation is the story of the day. Bond markets are in a complete mess. Government finances are an absolute basket case. And I think that there is a stealth rally going on in gold that has escaped many investors.
Okay, I mean, Chris Hart is going to be phoning up after the show and saying, soulmates, come with me. Let's go on a roadshow.
Harmony's up 50% or something. For
yeah, absolutely. Yeah. I mean, the gold shares have run a little bit, but Nick, you wouldn't go anywhere near them, would you?
No, I just am not smart enough to understand how you price gold. I understand how you derive the price of oil and iron ore and all of these others. It's basic supply and demand. Gold is something completely different. It's the state of capital markets. It's buying fear. It's central government printing. And I just can't put enough of a value on there to go there.
In America who keep guns under their beds that drive up the price of gold, isn't it? So
look, if you look at the correlation between, or the gap between the price of gold shares and gold itself, it's been at a record low for recordly wide for quite a while. So if you ever wanted to buy gold shares, now is probably your time.
Okay.
Not
you wouldn't go anywhere near it. Sibanye, is it a completely ridiculous idea, Joseph?
I wouldn't go into gold. I've excluded them totally for the past 5 years. We do a little bit of trading in and out, but you know, the exposure I would want, if you want to have exposure, it would be through Anglo Gold Ashanti.
Okay, but I mean, do you go for the big dog? But Sibanye's been the miracle worker. It's taken Goldfields assets and has turned them around so spectacularly, so much so that there are front runners for when Mark finally decides to offload Anglo Platinum assets. Now, if they go and buy Anglo Platinum assets into Sibanye, does it become less attractive or more attractive, Adrian Saville?
You'd have to look at the transaction and get a better sense of it. But as that sort of bulk statement, I'm always cautious about businesses that do large transactions. So this is a
12-month view. So I mean, you're taking Sibanye on a gold view, but you've got to take Sibanye because it's the only gold company in the top 20 from last year. You're sticking to it.
Yeah. If you allowed me to go deeper, I'd go to Pan Africa, but you won't. So I must choose Sibanye.
Absolutely. All right. So he's sticking to his guns on that one. What about you, Nic?
Let's not discount the reason why Sibanye did so well, because they took the rubbish assets out, and it was priced cheaply, and nobody liked it.
Yeah.
So what happens when you buy a hated, out of favour company? You get good returns.
Yeah.
So you know, whilst I don't like that particular company,
so why would you not buy Telkom then? Because
well, I know fundamentally, I think the business is. I think it's in real trouble. So whilst it's not mammothly overvalued, it's a better relative pick than a lot of those other top 20 stocks. But fundamentally, it can be as cheap as you like. I just think qualitatively, I'm very concerned.
Goldfields is in the top 20 performers as well, but you wouldn't go anywhere near Goldfields. We look at Foschini Group. It's in there as well. The Truworths trading update came out recently, and it was growing at lower than inflation. Clothing retail's got to be out of favour at some point, Mr. Price.
Yeah, clothing retail. Well, we're in the heart of the trading update season now, so we'll get to see what their December turnovers looked like. Truworths was horrible. ShopRite came out with an interesting number, and that showed you that their furniture retail was the star performer.
Bizarre, so in the context of JD Group's troubles, and of course
but there's a case again, as Nick is making, to go and look at the unloved assets, the stuff that's fallen out, not the stuff that's in favour, the stuff that's fallen out of favour. Lewis.
Yeah. Okay, anyway, let's ignore the top 20 completely. You're allowed one free stock pick for 2015, because I'm feeling generous this evening.
One local stock.
One free local stock.
Anglo-American.
Anglo-American.
You might have taken the words right from my mouth. I love the Anglo's basket, but
trading around $200 a share.
Yeah, but for the sake of diversity, I will go to my earlier reach, and that was Pan Africa.
Okay, Pan African Resources, the guys who mine gold out of the hills of
They mine gold at $800 an ounce, and they sell it at $1,200. Yeah. It's a great business.
And betting on the gold price going to $1,500-1,600. The margins go
great business.
Boom. All right, so Pan African. And what about
I'll go for Anglo-American.
Anglo-American as well. So we really would have had a clean sweep for Anglo-American, but Adrian Saville, being adventurous, is with a beard, is stepping out into gold mining. It will come off, won't it? At some point.
It will.
We hope so.
The Pan Africa as well as the beard.
but it's really interesting how one looks at the serial outperformers. The only one we prepare to go anywhere near is Aspen Pharmacare, and only Joseph is prepared to go there. You're not going near Capitec. You're not going near Aspen or PSG or the likes of Naspers into this year, or Mr. Price. But you uniformly agree that Anglo-American is the stock pick of 2015. But you go for Pan-African Resources because you like the gold story. Yep. And Nic Norman-Smith, you're the Grinch that stole 2015. And it hasn't even started. Gentlemen, I thank you very much for coming in 2 nights in a row. Really nice to have you here. Joseph Busha, the Managing Director of JM BUSHA Investment Group. Nic Norman-Smith from Lentus Asset Management, and from Cannon Asset Managers, the Chief Investment Officer, Dr. Adrian Saville. Thank you for watching. There'll be more tonight, tomorrow. Till then, good night and goodbye.